Hello everyone, welcome to today's US Open live webinar. It is Thursday, September 14th, 10 minutes before Wall Street opens. I'm your host, Nikos Zabouras, Senior Financial Editorial Writer at FXCM, and we have quite a lot of things to talk about today. Of course, we had just earlier the European Central Bank announcing another increase in rates, but it actually indicated a peak. There was quite some uncertainty going into the meeting as what it would decide. Over in the US, investors await the first day of trading from chip designer ARM in one of the hottest IPOs of the year. And we also had yesterday the European Union launching an anti-subsidy probe over Chinese electric vehicles, which now emerges as the next area of friction between the West and China, while oil prices continue to climb. These are some of the main things we will be talking in today's session. However, before we begin, as always, please read carefully through the risk warnings and the disclaimers. Once again, please read carefully over the risk warnings and disclaimers, and bear in mind that anything discussed here does not constitute investment advice and should not be construed as such. Let's give it another few seconds and then we will get going. Okay, let's get the ball rolling. We have quite a few things to talk about. As I mentioned, we're going to start with Euro USD and the ECB rate hike, with President Lagarde's press conference still going on. Then we're going to talk about USOIL as prices continue to rise. And then we're going to talk about the ARM IPO, one of the hottest IPOs of the year, and about the NASDAQ. We're going to talk a little bit about what I mentioned for this EU anti-subsidy probe over Chinese electric vehicles, and we're going to round things off as always with what's coming up. So let's switch to the hourly chart to better see the move after the ECB decision, which was down. The European Central Bank raised rates by 25 basis points in the 10th straight move since the July 2022 liftoff. Going into the meeting, baseline forecasts were for a hold, but there was high uncertainty. I don't think the ECB had much of a choice, since it raised its inflation projections for this year and the next. Economic slowdown, especially in Germany, is what called for this pause, and the central bank actually lowered its forecast for the euro area, for the GDP of the euro area. Given that it indicated that the rates, it actually indicated that rates have now peaked. And in particular, the statement said that rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to the targets. Essentially, what they said is that we're probably done hiking. Of course, there are many caveats to that. First question right off the bat was around that, about whether the terminal rate has been reached. President Lagarde did not actually answer the question. What she did is that she reread this passage that we just mentioned. That is why, of course, the euro dropped after the decision, because yes, it was a hike, but it was a dovish hike, since opened the door to terminal rates have been reached. Now let's go to the 4-hourly chart for our analysis. Nothing has changed dramatically since our previous sessions. We had talked about how the pair is exposed to 1.0634, 1.611. It dropped further today after the report, and there is a clear risk of breaching that level. And that would bring the 2023 lows in the spotlight at 1.0481. Technically, we could see some reprieve, but strong catalyst would be needed for surpassing the resistant cluster located at 1.08000840. Of course, we have next week the Fed in another pivotal decision. Now let's, of course, we still need to see what President Lagarde will say in the remainder of her press conference, but that's the first take, and it weighs on the euro. Let's switch gears and go to USOIL. Continues its advance to new 2023 highs on the back of tight oil markets. The International Energy Agency yesterday reaffirmed its 2023 demand and supply outlook and said that the recent extension of the supply cuts by Saudi Arabia and Russia through the end of the year will lock, it said, in a substantial market deficit through the fourth quarter. Now, the advance brings in the spotlight the descending trend line from the 2022 multi-year highs at around 97.5, but I don't think bulls are ready to challenge that yet. Of course, a lot is going to ride on the Fed next week, and prospects of more hikes could weigh. Also, another headwind posed by the faltering recovery in China. And we have seen, of course, rate cuts and other measures there, and we got one more today, but it has been largely a piecemeal approach that hasn't done much so far. There is definitely scope for a pullback since the move looks stretched and overbought in the near term, and that pullback would go up to the 200 period EMA at around $83 per barrel, but sustained weakness is hard. Daily closes below it would be required for the bullish bias to pause, but that looks like a tall order, and of course the downside is well protected. And with 3 minutes still before the markets open, let's go to the Nasdaq 100. We had inflation from the US yesterday. Headline CPI accelerated 0.6% month over month in August. That was the highest in over a year, driven of course by higher oil prices, which we just talked about. On a yearly basis, it increased 3.7%, in the biggest increase since May. Now, excluding food and energy prices, core inflation stayed at 4.3% year over year. Markets pricing a hold next week from the Fed and believe the terminal rate has already been reached, but there is less conviction around the latter. Strong economy, tight labor market, still high inflation keep more tightening in play. NAS 100 runs its second losing month, as higher for longer prospects pose headwinds. There is risk for further pressure, but once again, well protected from 14,716 downwards, which is the 38%, the 38.2% Fibonacci of the 2023 high-low rally, low-high rally, sorry. The index, however, managed to look past the inflation acceleration and is upbeat today, holding the 200 period EMA, the black line that we see on the chart, as markets and markets now turn to the ARM initial public offering. The British chip designer will begin trading today in New York in the hottest listing of the year. Of course, it's important because the company is indispensable to the smartphone market, as nearly all of the world's smartphones run on ARM-based processor, including Android and iPhones. And of course, we had the latest iPhone out earlier this week. Of course, you can find more around that written content on the FXCM analysis, market and research website of your respective regions. This IPO could provide another catalyst to the AI-driven rally of the tech sector. However, success is not guaranteed. Rivian was the previous biggest IPO a couple of years back and did not do very well. And some are concerned that the $51 per share price tag is quite high. Now, on the technicals, National 100 remains above the 200-period DMA, and that keeps the bullish bias intact. And the road to new 2023 highs remains open at 15,946, but fresh impetus will be needed for that. We can see that because of the factors we mentioned earlier, it struggles at the edge of the daily Ichimoku border. Now, before we move what's ahead, let's talk a little bit about the new area of contention in the already frail Sino-Western relations, which so far has manifested mostly in the tech trade wars. Now, electric vehicles emerges as the next conflict ground, since the president of the European Commission announced yesterday an anti-subsidy probe into the Chinese electric vehicle makers, whose prices are kept artificially low, as it said, by huge state subsidies. That's what Ms. von der Leyen said. Europe, of course, is the second largest EV market, and the region's auto giants have ground to cover against Tesla and Chinese makers. Some of them already have presence in Europe and looking to expand, such as startups NIO and XPeng. China's export of new energy vehicles, of course, that it is not pure EVs only, but plug-in hybrids and others, soared more than 100% year-on-year in the first 8 months of 2023. Of course, that is another topic where you can find written content on the FXCM market analysis website. And let's round things off with what's coming up. We have a slew of Chinese data due on Friday tomorrow, including industrial production and retail sales, both of which had retreated in the prior month. The recovery there is faltering. Earlier in the week, the inflation data offered some ray of hope. Consumer price index grew by just 0.1% year over year, but that was an improvement from July's contraction. On the producer side, the deflation pressures eased as PPI came in at -3%. Authorities are trying to support the economy, and today the central bank slashed the reserve requirement ratio by 25 points. It will start from tomorrow, and that's the second time it has slashed this particular rate this year. Of course, these monetary measures weigh on the yuan, which authorities try to actually support. And of course, on to next week, which starts with inflation figures on Tuesday from Eurozone and Canada, but the big events come in the second half with the central bank bonanza. The Fed, the Bank of England, and the Bank of Japan announce their decisions. That's it from me for today. Thank you for joining me. We will talk again next week on Tuesday, 10 minutes before Wall Street opens, as always.